Hello, and welcome to myfinanceteacher.org. First of all, thank you for being part of the community, and I do appreciate your attention. Let's have a look at a range of markets today, starting with the US dollar, DXY index. It keeps dropping, although it's already oversold. The ongoing daily cycle is now 44 days old, but usually over the last few years, these daily cycles in US dollar generally lasted for, on average, 59 days. So although dollar is already oversold, Bollinger Bands are not extremely wide, so there might be another few days, maybe another week or two, of general downward momentum in the US dollar until the end of the ongoing daily cycle at a usual length of about a couple of months. Although within this downward momentum, there might be some sort of a spike, say, to come back closer to this 20-day moving average before a continued decline, possibly into that FOMC meeting in the middle of December. This spike in the US dollar, together with some resistance, might actually slow down the progress in gold for a short term before this new daily cycle and most likely new intermediate cycle continue to bring gold prices higher. As you see, the resistance is based on these couple of recent lows, just at around 1850. Gold is very close to that, and we see today is just a flat day so far. We might cool down for a few days before breaking out of that resistance. Next, looking at the general stock market, the intermediate cycle is still pretty young at only about 70 days. So in the intermediate term over the next 1 or 2 months, I would expect the stock market to possibly trend higher. Looking at the shorter term, the daily cycle is now 34 days old. And on the chart, is that something of an ascending narrowing wedge? It's not extremely clear, but it might be this bearish formation, as the daily cycle is probably somewhere around its midpoint right now. S&P 500 is also close to poking above the Bollinger Bands. So what I expect is another few days of upward momentum, give us that poke a couple of times, before possibly coming down into the end of the short-term daily cycle. Next, looking at Bitcoin, the cryptocurrencies are a little bit tricky at the moment. Their cycles are getting really stretched. And based on how stretched these cycles, there is a possibility that this drop, even though relatively small, was the end of that previous cycle in Bitcoin, which started at the beginning of September. In that case, that cycle would be already relatively long at 79 days. Otherwise, if we do get another really significant drop in Bitcoin, say over the next few days, that would be more clearly identifiable as the end of the Bitcoin cycle, which would give us a cycle lasting for nearly 90 days, which is really long, but we did have a few of such long cycles back in the middle of 2019, as far as I remember, cycles lasting for around 88 days. Another thing to notice on the Bitcoin chart is this negative divergence between the price and RSI, which actually gave us a lower high. But on the other hand, Bitcoin has been pushing higher and higher over the last few weeks without rest, and we did see negative divergences back in, let's say, middle of November as well, which didn't actually transform into any kind of a price drop. In either case, though, in general, in the short term, I want to be cautious on cryptocurrencies. Although in the very long term, I am bullish and I think Bitcoin is probably going to do really well. Zooming in a little bit, we see that Bitcoin on the 4-hour chart seems to form this more or less symmetrical triangle. Maybe today or tomorrow it will continue to drop down to the lower range of this triangle, hit that lower range of the Bollinger Bands before pushing a little bit higher. Symmetrical triangles usually break on the either side, and they're slightly more common to break out in the direction of a continuation of the trend. As you see, this 4-hour chart had a trend from the end of November going upwards, so maybe there is a slightly greater chance of this triangle being broken to the upside. The height of the triangle is around $1,500, so if it breaks on the upside, the next target is somewhere around $21,000. However, instead of seeing Bitcoin at 21,000, I would instead really like to see a significant drop to give us a more identifiable end of the cycle, which would be a more clear entry opportunity as well. Next, looking at XLE, the black line here is crude oil, XLE is pretty interesting at the moment. There is potentially an interesting trade. XLE cooled down a little bit, and maybe it is a bear flag, but I think energy is still relatively undervalued. And even if crude oil doesn't go to significantly higher levels, if it stays somewhere around where it is, XLE might actually catch up a little bit, as crude oil has already broke above its most recent highs in the summer of this year, whereas XLE hasn't yet reached those summer highs. So on the risk side, if it is a bear flag, the lower range would be somewhere around 36.8, 36.7. That's around 5% risk level. And on the reward side, retesting the recent highs, which might prove to be some sort of a resistance, might give you a potential return of something like 21% or so on XLE, with a very attractive risk-reward ratio of 4. So by the time markets open in the US, if crude oil and XLE remain relatively strong, I might actually increase my existing position in XLE. Let's see about that. Next, looking at coffee. Coffee is also interesting. It had a chance to cool down a little bit here at the end of November. It also had a chance to close this gap, which was pretty large at around $116. But with all of that cool down, the ongoing coffee cycle is still only around 30 days long. Usually these cycles on average last for around 145 days. That's been the average over the last few years. So I think there is another potential push higher in coffee. So again, once the markets open in the US, I'll possibly take a stab at the coffee trade with the risk level at some of the recent lows. That's somewhere around 4% on the risk side, and the potential being a retest of the recent highs from September this year, which would give you a return of somewhere around 11 to 12%. That's an interesting enough risk-reward ratio of somewhere around 2.7, 2.8%. Not amazing, but I might consider that once the markets in the US open. And lastly, looking at natural gas, the cycle is already 10 weeks old. Usually these gas cycles last on average for 26 weeks. So there is a high risk that this cycle has already topped and is going to continue down for a few weeks. On the other hand, though, if the weather turns out to be unusually cold, gas might again break out of this 200-day moving average and maybe test the upper range of the Bollinger Bands, somewhere close to $3.3. Looking at the long-range weather forecasts, we see that November was warmer than usual, and that's possibly why natural gas prices came down so significantly in November. December is expected to be relatively close to normal, while January is expected to be somewhat colder than normal. That's at least for the Lakes region in the US. And looking at another region, the Atlantic corridor, for example, we see a relatively similar picture. December, quite close to normal, maybe a little bit colder than usual, and January, yet a little more colder than usual. So maybe there is a chance for natural gas prices to push a little bit higher over the next few weeks. But again, this trade is quite risky, with the cycle possibly approaching its midpoint either now or over the next couple of weeks. So this is my view of the range of markets. Let me know what you think. Share your opinion in the comments. We can all learn from each other to improve our trades and improve our performance at myfinancesteacher.org. For now, I wish you a pleasant day and good luck in your trades.